Good morning, good morning, good morning. It is Thursday, the 7th of August. This is the Morning Blast with myself and the magnificent, with a capital M, Mr. Michael Brown, where we will be giving you a review of yesterday's market moving events and a preview of hopefully today's market moving event. But before we do, I'll get the legals out of the way. Nothing discussed on the Spaces section constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Mr. Ryan Paisley, and indeed the magnificent Mr. Michael Brown.
All right, good morning to you, Ryan.
Right.
Good morning, everyone. Pleased to report that I am back from Silverstone in one piece and my nerves haven't been shaken too significantly.
Was it good fun?
It was incredibly good fun. Incredibly
Ah,
good fun.
I'm very.
I was chatting to Tom yesterday. I was saying I can very easily see why folk get the bug for that sort of thing.
I've only watched, obviously, as you know, my feet don't touch the pedals, but it's good fun just watching, especially, I'm fortunate enough with our good friend Tom to be in the pit lane quite often. So, yeah, I'm glad you had a very good time. Can I just start today with a little bit of a rant?
Well, as long as the rant isn't about my absence yesterday, then help
No, of
yourself.
course not. Of course not. You deserve a day off. If anyone deserves a day off, it's you.
I was working.
Um,
It wasn't a day off.
well, for me, to me, it was a day off for you. But my rant today, so I am very, it's a very rare occurrence for me. I'm actually in the Canary Wharf this morning,
Oh,
and
God.
considering it's meant to be, the financial capital of the UK, there's no fucking phone signal. Like never, like nowhere. I can't. I'm on 2 bars of 5G. It's fucking ridiculous.
That is
Anyway.
mental.
Anyway,
Um,
I have found a Costa Coffee Wi-Fi. There we are.
no,
I'm not
well,
saying Costa Coffee. You can pay me to do that. But I'm hacking in. I feel like feel like something off the Matrix. I'm hacking into their Wi-Fi. But anyway, enough about me stealing Wi-Fi. What's been occurring?
right. Well, if we lose you, Ryan, then we know you've fallen into some internet black hole, and probably not not
Or
not the first
I've,
time.
well, yeah, moving on, moving on. Quick, move on. Check his hard drive. Move on.
Right then, yes, indeed. Let's move on. It was sort of good old-fashioned risk-on day yesterday. The S&P and the Nasdaq rallying nicely. The S&P up by just shy of 1%. The Nasdaq 100 up just over 1%. Treasuries softer across the curve, with weakness led by the long end of 30-year yield rising by about 3 basis points, north of 4.8% once more. And the dollar trading softer against all of its major peers, and that softness continuing this morning as the dollar index tests the 98 figure to the downside, and dollar yen breaks beneath the 147 mark for the first time in a couple of days. In terms of catalysts from yesterday, there was plenty of news on the trade front. Firstly, President Trump imposing an additional 25% tariff on India. Of course, this is in response to India's continued purchases of Russian crude and also just general closeness to Russia, particularly in terms of defence. This news, not entirely surprising. Of course, Trump had flagged on a couple of occasions that India would be subject to a penalty or an additional tariff due to their relations with Russia. I guess the 25% that has been imposed is potentially less than some had feared, although it does, of course, mean that the total tariff on imports from India now stands at 50%, or it will in a couple of weeks' time when that penalty is due to go into effect if it's not negotiated away. And even at a 50% levy, I would argue that it probably makes the vast majority of trade between the two countries simply uneconomical and effectively amounts to a trade embargo similar to the one that we saw between the US and China earlier in the year, which again makes you think that this is more of a negotiating play than anything
Escalate to
else.
de-escalate.
Absolutely. Trump was also talking about chip tariffs yesterday. He said that he will put a tariff of approximately 100% on semiconductor imports. He didn't say when that tariff would go into effect, but what he did say, or what was alluded to very strongly, was that if a company, whether it be Nvidia or whoever else, pledges to build manufacturing in the United States, then they would receive an exemption from those tariffs. So very much a sort of carrot and stick approach going on here from the Trump administration. The threat of a tariff is there, but if you write a check and put a shovel in the ground and pledge to build a factory, then you're probably not going to have to pay that tariff. On
Sorry,
the
just on this, as we've seen with like Europe's promises of what was it, 600 billion investment, which they, let's be honest, they can't rub €6 together at the moment. Um, it's basically he wants these agreements or these pledges just so he can post on social media.
yeah.
There's very very little to no enforcement of this going to be going forward.
Mhm.
So yeah, it's just pinch of salt needed with everything. It's basically just making Trump feel better about himself so he can make a nice little long-winded post about how good he is on social media.
Yeah, absolutely, and how it's the best deal that the world has ever
Oh
seen.
yeah.
On that note, actually, we did hear from Apple yesterday. They have announced that they're going to commit another $100 billion worth of investment to domestic manufacturing within the United States. That sounds like a big number, and it sounds very fancy. And indeed, it will bring more of Apple's supply chain back to the United States. But Tim Cook was at the White House yesterday, and he was being very careful in some of the phrasing that he used when, for example, Trump was saying, does this mean we're going to have iPhones made in the US? If an iPhone sold in the States, it should be made here. Tim Cook gave a very, oh, hello, what's happened there?
What?
Oh, there was just a very loud noise down your microphone. I wonder whether Costa Coffee security had come and
Oh,
felt your collar or something.
what? That wasn't my collar.
Oh God!
Hey!
Oh no! Anyway, moving very swiftly on. Well, yes. So this made in the USA iPhone nonsense. Tim Cook gave a very specific answer around how all of the screens for the iPhone and the Apple Watch will be made in Colorado, and just didn't mention any other part of the iPhone whatsoever. So it feels like he was sort of trying to get himself on Trump's good side and hope that Trump didn't realize there are about 1,000 other parts that go into an iPhone. In any case, CNBC reporting that investment means that Apple will be, quote, largely unaffected by the US tariffs that are imposed on India. So it is a positive to some degree. And just in terms of, just to wrap up on trade, in terms of the rest of the world, the Swiss president, she was in Washington, D.C. yesterday. Mid-morning yesterday, we had reports that she had held a good meeting with Secretary of State Marco Rubio, as well as another promising meeting to discuss tariffs. About 3 hours later, we had news that the Swiss president was leaving D.C. without having reached any deal on tariffs. Of course, Switzerland now being charged a levy of 39%, which we believe Trump came up with completely at random, but maybe
But
some.
again, I am utterly convinced that was the total of 3 darts in the dartboard.
Well, I'd be amazed if he could get 3 darts to hit the board, to be honest. But there we are. There is also an issue there around the prevalence of the pharmaceutical sector in Switzerland, which is also likely why they got hit with such a levy. Anyway, in terms of other bits and bobs from yesterday, in terms of the Fed, Bloomberg citing sources yesterday noting that some advisors to President Trump are pushing for him to appoint a temporary governor to fill the soon-to-be vacant seat as Governor Kugler leaves the Fed on Friday. The idea here is that this sort of a move would give Trump more time to decide on who the next Fed chair might be. Now, this is a little bit complicated. You need to understand how the Fed works here. So in many ways, whoever gets the job will be a temporary appointment anyway, because the term that they're being appointed to expires at the end of January. So they would have to go through a renomination process before the end of January to then get the entire term, which I think takes them out to 2040 if they were to serve it out in their entirety. I think the assumption that everyone have been working on is that whoever Trump picks, they will just be renominated, and that will all just be a formality, and they'll get the last remaining chunk of Kugler's term plus the 14 years of their own term. What these sources are indicating is that they may actually be two completely different names. So we may get
Right.
person A, who does the September to January bit, the last chunk of Kugler's term, and then we get person B, whoever that may be, who then serves the full 14-year term as governor that would have taken place anyway. And of course, that second person would likely be who Trump wants to pick as Fed chair to take over from Jay Powell next May.
Why make it simple when you
These
can make it complicated?
Well, I know. The sources that they were citing were saying that this is basically so Trump doesn't rush his choice for Fed chair. I would say that that is a slightly kind interpretation of the situation. What's actually going on is Trump loves reality TV and just wants to keep us all guessing and be the centre of attention for as long as possible. I think that's the
You're
more likely
fired.
scenario. Is
You're
it's sort of
hired.
the apprentice for Fed chair, basically. These sources did also note that if they go down the route of a temporary pick, the person in question would likely, one, already work within the federal government, and two, likely have already been confirmed by the Senate to their job, which does quite considerably limit the pool of potential applicants for that sort of a role. Certainly given that Scott Bessent has ruled himself out of the running, he wants to stay as Treasury Secretary. I was sort of scratching my head as to who such a temporary name could be, and I guess the most obvious pick would be Bessent's deputy, a guy called Michael Falkender, who is number two at the Treasury. But again, we're sort of getting into the realms of speculation there, and we'll see what happens on that front. We did have a bit of Fed speak yesterday from Neil Kashkari, who votes next year. He said that the economy is slowing. Thanks for that, mate. None of us have been able to work that one out on our own. He also said that it may be appropriate in the near term to begin to adjust the policy rates. Again, not really pushing back on expectations of a September rate cut, which markets still price it as near as makes no difference, a 90% chance. A couple of other things from me, just before I hand back to you, Ryan, in terms of data yesterday. Eurozone retail sales coming in bang in line with expectations, having risen by 0.3% on a month-on-month basis in June. We also had some Treasury supply out of the States, 10-year auction tailing by 1.1 basis points. Not great, actually, and we had a tail on the 3-year auction a little bit earlier on this week, and of course that comes ahead of 30-year supply a little bit later on today. And lastly, I'll end with what is sadly a rare bit of good news for UK PLC and the London market in general. Glencore yesterday
Yeah.
announcing that they do not believe a US listing would be value accretive for the firm. So they look like they will be staying at the LSE for the foreseeable future, which, I mean, we shouldn't be celebrating that sort of thing, but in this day and age, I'm afraid we have to take any bit of good news that we can get.
And
So,
also, we shouldn't be sitting here going, what the fuck are they doing? But I am.
well, yeah, I would agree with that. I do wonder what's going through their heads on that one, but yeah, I'm
Although,
not gonna complain too much.
I did see, I can't remember who it was, but our good friend Tom, hello Tom, I can see him listening in. Tom mentioned this yesterday, and someone did say there was some study that I think was by Deloitte, maybe, that kind of did some kind of tracking of stocks that then moved from London to New York, and over 5 years or whatever, they the performance wasn't great. So I'm not going to say it's related to that, but yeah, just a bit of anecdotal statistics in there to say maybe it wasn't a good idea. But again, why you want to stay in the UK at the moment is anyone's business. But
Yeah,
the way that
I
LSEG
saw that as well. I've just gone looking for it, and I've ended up looking at pictures of bendy buses on our good friend
I
Tom's
know what,
feed. So I don't quite know what he's been up to there.
for a second I had no idea where this conversation was going. Um, I'm
Well,
glad
on
you
that
said
note,
buses.
would you like to move on to the overnight news?
I am so glad you said buses. And anyway, on to the overnight news, courtesy of our dear friend Zach Eisman. Hello, Zach. I can see
Oh,
you.
morning, Zach. Thanks for turning up. Well done,
Um,
lad.
you be careful. Zach is a prince of a man. Do follow Zach. Do subscribe to the Overnight News Roundup. As I keep saying, it is the best way to keep up to date, or get up to date, should I say, with the overnight news that matters to markets. So starting off with trade, as we all know, unless you've been sleeping under a rock, Trump's higher tariff rates from 10 to 50%, anywhere where the darts have landed, on dozens of trading partners kicks in on Thursday, so they say. Trump said he would impose roughly 100% tariffs on all chips coming into the US, but exempt tech companies that have promised to manufacture domestically. Trump also said he will announce further tariffs on China, similar to the 25% duties announced earlier on India over its purchases of Russian oil, depending on what happens. Thanks for that. The Asahi newspaper reported US will add 15% tariffs on Japanese imports without applying exemptions for items that have already have tariffs over 15%. That's citing an unnamed White House source. Swiss President Suter, as Michael said earlier on, left Washington empty-handed yesterday without meeting with Trump or any of his top trade officials. So that was a bit of a wasted journey for her. Her proposal for a 10% tariff was rejected at the door by the sounds of it. In macro,
Oh dear. Ryan, are you there?
will need to cut interest rates soon
Oh,
as
he's back.
markets. Sorry,
You,
I'm going.
your 2 bars of signal obviously let you down.
Is the Costco coffee Wi-Fi? I'll keep going. Trump said he met with CEOs of Citigroup and Bank of America on Wednesday to discuss the administration's plan to privatize U.S. mortgage financing companies, Fannie Mae and Freddie Mac. That's according to Reuters sources. I suppose that would free up that twat Polt to be something in the Fed. Is he
Oh
still tweeting?
Christ!
Yeah, see,
Oh
you forgot about
yeah,
him, didn't you?
oh yeah. Well,
What
I
a
tried
moron.
to.
What a moron. China's exports, they grew at a faster clip
Oh,
in July.
sorry. I've,
Go on.
for my sins, I've just decided to go and look at his Twitter feed as well because I wondered what he was doing. He's still halfway up Trump's arse. He tweeted at
Oh,
midnight. No one works harder than President Trump.
oh,
Believe me!
mate, do me a
Exclamation mark.
favour. See that again, that's someone that's desperate for the job.
Oh,
What was I saying? China's exports grew at a faster clip in July, showing that US tariffs that so far haven't curtailed China export machine, although trade with America's fallen. That probably means that they're exporting to parties and then they're exporting to America, but who do I know? Meanwhile, imports also saw a surprise rise, bringing China's trade surplus down to 98 billion with a B in July from $115 billion in June. That's according to Wall Street Journal. Germany's goods exports to US slid further in June as the impact on tariffs are kind of biting in. The country's export-orientated economy continues to bite despite overall exports growing. UBS, which has been among the few firms predicting a recovery in China's property sector, now expects a delay following a renewed sales downturn in the second quarter. Geopolitical news, Trump said there was a good chance he would meet soon with Russian President Putin about the war in Ukraine after an offer Russia made on Wednesday during a trip to Moscow by Special Envoy Steve Witkoff. In equity news, before I hand back to Michael, Apple, they said it would spend an additional $100 billion with a B dollars in US investments, bringing its total investment commitment to the country to $600 billion over the next 4 years. Samsung Electronics, they will produce digital image sensors for Apple in the latest sign of the South Korean technology company starting to reap the benefits of a series of US investments and President Trump's aggressive trade policies. What else we got? Toyota Motor, they're cutting its full-year operating profit forecast by a sixth on Thursday as an appreciating yen and higher US import tariffs weighed on financial results. They warned it will take a 9.5 billion hit from Trump's tariffs, that's dollars. Sony, they raised its full-year operating profit forecast on Thursday by 4% to 1.33 trillion yen, which in real money is $9.01 billion, citing expectations of a smaller impact from Trump's trade war. And finally, for me, AP Moller-Maersk, the shipping giant, raised its financial outlook for 2025, saying demand outside North America is, quote, resilient, even amid concerns over a trade war. And that's it from me on the news flow. Back to you in the studio.
good stuff. Thank you, Ryan. In
You're welcome.
terms of today, then, it is, of course, Super Thursday here in the City of
Yay!
London, with the Bank of England set to announce their latest policy decision at midday. In terms of the running order, at noon, we will be getting the decision, the policy statement, the minutes of the MPC meeting, and, of course, the updated monetary policy report. And then half an hour later, at 12:30 London time, Governor Bailey and a couple of his deputies will be giving their post-meeting press conference. In terms of the straightforward stuff with the BOE, they will be delivering a 25 basis point cut at the conclusion of the August meeting. That would lower bank rates to 4%. It would mark the third rate reduction this year and the fifth rate reduction that the BOE have delivered this cycle. In terms of other straightforward stuff, the policy statement, that is likely to be a carbon copy of the one they issued last time out, again with guidance noting that they will continue to take a gradual and careful approach to future rate cuts, and that policy needs to remain restrictive for sufficiently long in order to bear down on the risks of persistent price pressures becoming embedded within the UK economy. That is where all the straightforward stuff ends and where things risk descending into slightly a bit of a shambles. The vote split, it could be anything, to be completely honest with you. I went through the Bloomberg survey for the BOE vote split today. At the most hawkish end, I did tweet this out, so do go and have a gander at that. At the most hawkish
All right,
end
I'll
of
give you a repost. All right.
At the most hawkish end of the spectrum, we have HSBC, who believe that there will be 3 MPC members voting for policy to be held steady, 4 who vote in favour of a 25 basis point cut, and 2 who vote in favour of a 50 basis point cut. At the complete other end of the spectrum, most dovish end, we've got BNP Paribas, who don't think there will be any dissenters in favour of holding rates steady. They think 7 will vote for rates to be cut by 25 basis points, and they think 2 will vote for rates to be lowered by 50 basis points. The consensus, as much as there is one in that mess, is for a 2-5-2 vote, i.e. 2 unchanged, 5 25 basis point cuts, 2 50
You
basis
know
point
what?
cut. Go on.
I don't think I can remember. Obviously, my memory is like toffee, but I don't think I can remember a split like that in years.
No, and well, I was going to say that as well. And also, I don't remember going into a BOE meeting with forecasts like this,
No,
where no
true.
one really has. Well, one, no one has a clue as to what the vote split will look like, and two, and it's not often I say this, all of the projections that I've put out on from the sell side are basically as valid as each other. You know, I
Yeah,
could sit here. I'm not going to do it because we've all got things to do. But you could easily make a case for
yes, yeah.
3 50 basis point dissenters,
And
and
I
also
guess,
a case for 3
yeah,
hawkish
yeah,
dissenters.
absolutely. And I guess, all right, okay, it's not a live decision in the sense of we kind of know that there's going to be a cut, right? We kind of know that
Mm,
anyway. So in that sense, yes, there's going to be a cut. But in terms of for those kind of trading short sterling or whatever, where the split does make a difference because it kind of gives you an idea of what the MPC are thinking going forward down the curve. You would argue that this is a live decision in terms of that. So we could
mm.
potentially, well, I guess that the amount of people that trade short sterling that are listening to this is probably quite slim, but but it could be quite a good day to be trading short sterling. Or I see Mr. Benton, a broker to the stars, a broker to the landed gentry.
Mm. I think
It, it would be a good day to be keeping an eye on short sterling.
I agree. I think to kind of try and cut out the noise, I think the one thing I would focus on in terms of the vote split is the names behind those
Yes.
votes. And the reason I say that is because if you're trying to think about what the BOE will do going forwards, and particularly in terms of when they will cut,
Yeah.
you need to make the assumption that the decision to cut will come from the governor,
Yeah.
and it will then need support from other
Yeah.
policymakers.
And if you're just
Now,
watching this on the headline, first of all, you'll see cut, then you'll see the
Mm.
split, and then you'll
You
probably have
need
to wait.
magnitude of
Yeah.
cut as well. Yeah.
Yeah. And then you'll probably wait 30 seconds to work out to read who's
Into the
done what.
minutes. Yeah.
It's going to be put it this way, unless you're a seasoned short sterling trader, don't trade it for the first time today.
No, please don't. That is investment advice, actually, the one bit we will give you. But just lastly on that, the reason I say that's important is because you need to try and work out basically, are the BOE still in a position where they can cut when Bailey wants to?
This is it.
I.e., if he walks into an NPC meeting, I'm massively simplifying here, of course, and sits down in his big chair at the end of the table and goes, we're doing a 25 basis point cut today. Do 4 other people around that table put their arms in the air in support of that decision? Now, you would say that Dingra would all the time. Breeden and Lombardelli will probably vote with Bailey all the time anyway, because they're his 2 deputies. You've then got to go, what's Hugh Pill, the chief economist, saying? What is Deputy Governor Ramsden, who's gone a bit rogue recently? What's he thinking? So it could be a bit of a mess. But we will see how that all shapes out later. The other thing to focus on with BOE today is the latest forecasts. I think in the near term, they're going to nudge their inflation expectations higher, their unemployment expectations higher, and their growth expectations lower. All of that is really just sort of marking to market their previous forecast based on the outturn since June.
Yeah.
The question is, how prolonged do they see those effects being? They previously expected inflation to get back to 2% in the first quarter of 2027. So again, be interesting to see whether they reiterate that expectation. And then, of course, at the post-meeting press conference, I'm really not expecting anything new from the big man, to be honest with you. I think he's just going to reiterate the guidance that we saw in the policy statement. In terms of context, obviously, Ryan, you mentioned short sterling markets pricing a 96% chance of a 25 basis point cut today. So pretty much nailed on in the market's mind. Although, judging by the message he's just sent me, I don't think it's nailed on in young Zach Eisman's mind. Markets also price another 25 basis point cut before the end of the year, currently discounting that for December. In terms of
I think that's the kind of markets you look further out the curve. That's going to be what's affected by what this vote split is, and like you said,
yeah,
who's voted.
100% agree with you on that one. Away from the BOE, we have the weekly US jobless claims stats due a little bit later on today at 1:30 London time, 8:30 on the East Coast. Initial claims seen at 222,000, up from a prior 218,000. Continuing claims, they're seen at 1.95 million, up from a prior 1.946 million. Bear in mind, of course, neither of these prints pertains to the August non-farm payroll survey week, but given the pretty grim July jobs report that we had last Friday, you would expect that the jobless claims stats will attract more attention than usual. Also today, we have a 30-year supply out of the States, a $25 billion auction at 6 o'clock this evening. Speeches from the Fed's Bostic and the ECB's Ollie Rehn, who, interestingly, is increasingly being talked about as Lagarde's successor when her term expires. And earnings today come from the likes of Eli Lilly before the market open and after the market close from the likes of Pinterest. And, of course, the usual sort of standing but boring reminder that markets will also be on alert for any potential tariff or trade headlines as we move through the day ahead. We are, incidentally, 5 days from the expiry of the US-China trade truce, and no idea whether it's going to be extended or not. That one seems like it's going to go to the wire.
It's all quiet on the Far Eastern Front.
It is, yes. Very good.
Thank you, mate. Thank you. I'm good with a compass. Mr. Michael Brown, thank you so much. As always, my very dear friend. Listeners, thank you so much for tuning in. We really do appreciate it. Whatever you're doing today, keep it tight, stay safe, and we'll see you all tomorrow. Much love.